Good morning. I took uh, always late for my life, unfortunately. But yeah, I'm already in this trade immediately after this displacement on the 1 minute and the 5 minute, and the tap into the fair value gap and trading down. I entered after the close of the second bearish candle on the 1 minute, and we're currently in drawdown. We have another fair value gap up here. Price may trade up to into it, and then hopefully probably take us further down. We are in three contracts, and we're looking to target these lows over here, these relative equal lows on the 15 minute. These these are considered too smooth lows, and yeah. So we're hoping price would. It's kind of almost a 1-to-1 risk to reward ratio. We're still in the very first 15 minute of the 9:30. Don't usually take trades during the first 15 minutes, but I've seen really clear rejection here off of this 15-minute SIBI, and we're sitting right above it is another 15-minute inverse fair value gap. So that kind of gave me some kind of confirmation that price wants to trade lower to take out these lows and tap into a 15-minute BISI sitting right here. I will draw it for you in a minute. It's gonna be a pretty much a short trade, 1-to-1 maybe risk to reward ratio. Let me go ahead and put in this 15-minute BISI, which I believe price will be drawn to it. It could probably even go lower to this one, but for our trade we're happy to take our trade-off at this sell side liquidity. Just to be clear, we're looking at our risk is apparently higher. We're gonna bring this down. Oop. It's not a problem for me when the risk is higher. When I have some kind of confirmation, I'm cool with it. But I am gonna bring this down to make it 1-to-1. So if price trades up to this level, then we know we're wrong. Basically, we don't have a trade to the downside. $140. So I would say right about here. Take two contracts off here. If I feel uncomfortable with the trade at any moment, I may just close the trade, um, rather than wait for it to hit my original stop loss. But so far, I feel good about this trade. Again, I do not trade the 15 minutes, and I don't actually even advise. I advise against it, especially for those who are just still beginners. Highly suggest that you wait out, not just the first 15 minutes, but I would actually suggest to wait out, advise to wait out the first 30 minutes, sometimes even an hour, between 9:30 and 10:30. In this case, so far, so good. Can't complain. Still in drawdown, and just want to go ahead and draw this 1 minute SIBI, where price tapped into, respected the midway, consequent encroachment of that 1 minute SIBI. The body is closed before it, the wick goes slightly above it. This black candle here, considered a displacement. Um, so basically, the setup rules, I think they all add up here. I don't see any. I don't see anything out of the ordinary in terms of our setup rules. I think it checks the boxes, and all we want now is to take the two contracts off here, and from there we will move our stop loss to break even and keep a one contract runner, see if it gets to final TP. it looks like it wants to tap again into that 15-minute fair value gap. This 15-minute fair value gap right here. Trades below it, taps into it, and then trades lower. I'm gonna go ahead and move my stop loss. I'm willing to take this risk. Taps into this fair value gap yet again. Move this, alright, just to be clear. It does not tap into the 15-minute fair value gap. I expect it probably will. But we're fine with taking further loss if it does actually trade all the way up. That's why I advise against taking the first 15, maybe 30 minutes. So that's where basically open range is supposed to be decided during that time frame. It's important to be confident when all your boxes are checked, your setup boxes are checked, and be confident in your trade and accept whatever outcome you get out of it. You know, especially when you have all your setup boxes are checked. Losing trades are inevitable in this business. Taking losses is inevitable. Another reminder I'd like to point out too is that this trade bounced off of this inversion fair value gap and this 15-minute CB. It actually did close above the 15-minute CB, but it respected the inverse fair value gap, which is sitting in premium considering the dealing range. So that's another basically confirmation to be added and to be added even to your notes and journals. When you're looking for your setup and checking those boxes of your setup. And I know they say never move your stop loss, but I think moving stop loss is managing risk or managing your trade just as it is when you're moving your TP or taking partial. I do agree not to move your stop loss, but in some cases where you're, like I said earlier, where your boxes, your setup boxes are all checked, I don't think it's a problem to move your stop loss, just as I did earlier. We're still not profitable. Okay, we're after 15 minutes of drawdown. Now we are slightly into profit. I don't expect price to go back here. If it does, then so be it. So I am going to move my stop loss slightly lower. Gonna go ahead and place in this fair value gap. It's crazy price action. That must have been news. $10 a.m. Consumer sentiment. That almost took us out. It still could. Any stops resting before above these highs were taken. We're wicked out right here. actually want to move my stop loss again above here because just in case price wants to tap into this 5 minute fair value gap before trading down again. This here was not respected, but that's due to news. We're into this fair value gap one more time. Just tapped into the 5 minute fair value gap also, and it takes us out. So basically price obviously reacted to that news and it just wants to go higher. Respected the 5 minute fair value gap. And now coming down again, we may take another entry. Let's see, depending on how this candle closes. Put our stop loss there. Take profit again at these lows. We'll see if we'll take this obvious rejection on the 15 minute. rejection of the 5-minute fair value gap, rejection of the 15-minute fair value gap. For those of you who are not seeing it, there's a 15-minute sitting inside this 1 minute. This candle's low and this candle's high. If I were to take partial, I would do it right here. These wicks are really damaging. It's the ugliest thing you could look at in price action. It's just the wicks. So we got two big wicks here on the 15-minute, and then it just gets uglier as you go down to lower time frames. Okay, we've secured the 3 contracts. We have 2 remaining contracts. Bring my to break even, and just let's see if we hit our final ultimate TP. And takes out our runner. I still believe price will trade down, but I say we'll wait for until the 10:30 before we take any more trades. That is if we do take any more trades. This is our new buy side liquidity on the 15-minute, of course. We put in, that's our IBH, which I believe is already set. The open range. High and low. Simulation. So it's not supposed to be a buy limit, it's supposed to be a sell limit. if it does test my limit here, I will be filled. And we're gonna take this out. Gonna move this 15-minute where I expect it to be hit. Price didn't go in our direction. Our when we moved our stop loss to break even or slightly above break even in this case, basically we were taken out prematurely. I would say that was maybe a mistake. Our stop loss should have been above this high, about this wick here, maybe above these. And then we could have basically reached to the target that we were looking for. IBL will be set in less than 20 minutes, less than 10 minutes, sorry. 3 minutes before IBL is set. We won't be needing this for now. Just want to go ahead and draw out that 15-minute fair value gap that I was talking about earlier, which overlaps with this 15-minute SIBI. I won't be using this for now. See the wicks on either both sides. Sell side resting below this low, taken, boom, boom. On the 1 minute, this would be it. These relative equal lows, taken. Price goes higher. Excuse me. Fair value gap here. 1 minute busy. Trades back into it twice. And then boom. I'm not really convinced that price wants to go back to take out buy side liquidity over here before taking these what ICT calls too smooth relative equal lows. They're like there's maybe half a point between 1 and 2. These look like they're exactly the same. So I still believe price needs to take this down, needs to swipe this. This is just to take out any resting stops here. It must come down. In overall bias, I'm still bullish. This is the last day of the week. Still bullish on the weekly. This 15-minute candle just started and then price boom. It will swipe this. It will tap into this 15-minute busy, and that's what we're waiting for. It may even go lower to this 15-minute busy. We are sitting in discount right now, so IB is test is set. 10:33 at 10:30 is when I see 10:30 New York time, that is. So when IB high, IB low set. IB high was set before. So now if price trades try it will go lower, take out this sell side, tap into this fair value gap, and then off of this fair value gap I expect it to trade to take out these highs, these relative equal highs on the 5 minute and on the 1 minute, or these on the 15 minute. Now price may want to also take out London low before trading back up to take out those buy side liquidity, and if it goes down to take out London low, I believe it will tap into this 15-minute busy. I see a wick test, I see possible wick test over here. Show you. Will it fill it or not? We're about to find out. Wick test is TBM setup, one of the TBM setup on the 5 minute. Says it works on multiple time frames, but prefers it on the 5 minute. Does not think it's accurate on the 1 minute, and doesn't usually trade it on higher time frames because it just takes longer, and he likes these quick scalps with, you know, base points. takes us out. That doesn't work. It's fine, it's very low risk. Sell side's taken. Here is our no sell side. This over here would have been an ideal wick test. Price comes down, test the wicks, even goes lower, goes up. You get in basically here and you get out here. £10, that's pretty much exactly just above 10 points. What we're looking at here, we're going to consider this a displacement, taking this swing high, fair value gap with inside. Price needs to trade into this. If it gets rejected off of this, taps into it, rejects it, we may take a long. Targeting this 15-minute SIBI and ultimately these highs over here. Go ahead and simulate this. Just to give you an idea on what we are talking about. Go for 3 contracts. TP. Stop loss. If it disrespects this fair value gap, then we're taking the trade out, just closing it right there. It did close below the 50% level of the fair value gap, but not outside it. So I'll give this 1 minute candle another chance. See how that goes. If not, we're not gonna wait for it to come down all the way to the stop loss. Okay, there goes. Take this trade out. Taking 3 losses today. Maybe it's not our day. Too many wicks. We're down $520 on the day. Comes down to this volume imbalance. There's 2 volume imbalance, one over here and there's another one over here. So it trades down into this one nicely and then turns back up. What we're gonna do now is we're gonna wait for a displacement above this 5 minutes, basically above these highs. Gonna trade down into a fair value gap, which will be formed, and then take a trade. If what we're saying is to happen. So we're pretty much consolidating so far. There's not much happening. 11:30, maybe 11:15. I've got some commitments. I got an appointment. I may have to end the stream before 11:30. But until then, we're here. If we do get a setup, we could actually. We could take it. If not, we'll just wait it out. So far, just basically after the opening range, initial balance was set. Price, like as of here, as of this moment, price just consolidated. It just boom, 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 boom. Went, out of track a little bit here, just to, because it wanted to take out the sell side liquidity resting here. That was on the 15-minute, if you remember. And also pierce into this 15-minute busy. And now gave us, this is the down move. This could have been a displacement, but for a really quick scalp, but we want to see something take out these highs, preferably these highs here. Displace above these, form a fair value gap, trade back into it, preferably before below daily open, 12 a.m. And that's where the entry should be. If we don't get a buy setup, then we'll probably, after this big move up, right around here, we may need to trade back in to fill this in further before trading higher, because if you look at this here, we are making relatively lower lows. This was news, 10 a.m. Basically, this could have been a silver bullet off of this fair value gap. Boom and boom. Okay, I'll be ending the live stream at 11:15. So just above 10 minutes, and I will be though trading afterwards when I come back from my commitment, and we'll see what we get. I would say maybe we can get something to the buy side during the PM session. While we're sitting here, I just want to do some tape reading. Just want to show you guys why I do trade the 15 minute, the 5 minute, and the 1 minute for those of you who are here for the first time. This is an old 15 minute BISI, a bullish fair value gap. This has been inverted into a 15 minute inversion fair value gap today at around 8:30. We also have a 15 minute SIBI here. This 15 minute SIBI was not respected, but price did not really, it closed above it even on the 15 minute. And that normally gives us an indication the price will go higher, but then it just came down and hovered mostly inside it with slight movement above it twice, over here and over here. But what did not happen on the 15 minute time frame excuse me, was that this 15 minute inversion fair value gap was respected on a 15 minute time frame, and then price, after this consolidation between 8:30 and 9:30 price displaced and gave us this fair value gap to trade off, and boom, went down. We missed this as I was trying to go on live stream. I had an issue with the live stream again. We missed this, but then we got an entry somewhere. I think it was somewhere over here on this fair value gap, and then we were taken out by this move up at 10 a.m. news, so I completely forgot about. And then we got another opportunity. Basically, this 10 a.m. goes into this again, the same fair value gap, respects it and trades even lower. And had we entered here at the first fair value gap, our stop loss would have been above here, or at most above here. And that has never really, price never really reached up there anymore after this displacement. And we would have been safe even at 10 a.m. But we came up here, price took us up because our stop loss was above these highs, or maybe above this fair value gap. I think it was somewhere around, somewhere around here, just above the midway level of this fair value gap, which was pierced, and then boom, trades down again. And where does it trade down again? If you go back to the video, see from the very beginning, I was saying I trade from one 15 fair value gap to another 15 minute fair value gap. I trade from a 15 minute, in this case, let's say a 15 minute fair value gap that's sitting in premium. Premium is the upper level of the dealing range. The dealing range of a higher time frame, 15 minute, and this is the 50% level. Go back here of the 15 minute dealing range. So we were sitting up there. Now we are below this dealing range. I think we may have even an updated dealing range at the moment. So we're sitting above this dealing range. So when you're in premium and you hit a PD array in premium, in this case a 15-minute fair value gap, or in this case a 15-minute inversion fair value gap, price tends to go lower. So basically you'll be looking for shorts post 9:30 if you're trading futures or stocks, that is. And that's exactly what happened. Where do I target? I target the 15-minute fair value gaps that are below the 50% level. The most obvious one, where I see relative equal lows just above this, or these ones here on the 15 minutes, is this 15-minute BISI, which is a PD array sitting where? In discount, below the 50% level of the dealing range. And what does price do? Price trades, pierces it, takes out sell side, those relative equal lows down there, pierces into it slightly, and trades back up, does not take out that high, basically keeps forming lower lows, lower highs, and now is about to even trade lower into it. I believe that it wants to fill at least up to the 50% level of this fair value gap, if not even go lower, reaching this fair value gap. We don't care about this fair value gap. All we wanted is bounce off from 115 in premium, 15 PD array in premium, to another 15 PD array in discount. Look at this range. Let's say we took a trade at the lower level of this fair value gap, which is somewhere around here. This is what we're talking about. And I usually take off my trade at the upper level for trading down. Look at what we're talking about. One contract. I'm going to simulate this for you. You'll get an idea on how much you'll be making. Just one contract. Sell limit here, which takes you slightly into drawdown. TP here. Stop loss. Above these highs, let's say the midway point of this 15-minute fair value gap. This move down that we were looking for earlier, we just mismanaged our trade with our stop loss. You'd be risking $48 to make 174. How does that look like? R&R. Three to one. See how that works? Now tell me this is not a good trade. And we're talking about one contract. And you would have made this in from 9:33 to 10:35, basically 1 hour. Just under $200 in 1 hour. This is just one contract. Let me show you how it is if it's two contracts. 349. Three contracts. 523. Four. It just keeps going higher and higher, obviously. Six contracts, you would have made $1,000. If you want to do something like ICT does, let's say it takes 10 contracts or 12 contracts, you could pass your, your prop firm challenge account with one trade. Simple setup, but not easy. But setup is really clear and simple, and this is why I've stuck to this. Out of studying all of the ICT courses, my focus was obviously on the 2022 mentorship, and I've come to find out that this has worked best for me. Back tested using these three time frames: the 15 and the 5 minute and the 1 minute. To be honest, I use mostly the 15 and the 1 minute. Now 5 minute, as sometimes I look for further. I look for basically a displacement. I do get a displacement on the 1 minute, but there's some days where I want to see a displacement on the 5 minutes with slightly higher time frame. It just gives me the midway point between the 15 and the 1 minute. But my entries are almost exclusively on the 1 minute. So I hope this kind of clears it out. We did take losses today. I would say my loss, my fault, because I mismanaged the trade. I mismanaged my stop loss, and just wanted to clear this out before I log out of this live stream. And I will be trying to take some trades later if I do find some. If not, basically we'll call it a week. And even though we did end up with a loss, but overall this week was quite excellent in terms of our directional bias, as we were bullish the whole week. We were trading above weekly open the whole week. One of the main reasons why it gave us that directional bias, even though I don't really trade sometimes. So many days I trade with no bias whatsoever, just relying on my 15-minute PD arrays, in this case fair value gaps, and my 3 time frames, the 15-minute, the 5-minute, and the 1 minute. So that will be all for today. Thank you for tuning in, and I'll see you all on Monday. I still haven't decided if we're going to stream on Monday, but most probably yes. We need to see if we're going to blow out this account, or we're gonna actually hit our target for this challenge. So far we've covered 10 days of this challenge, so we have pretty much 20 more days. Take care, trade safely.